Yes, how great. Another one bites the dust. This time around, we have the huge China bull that tapped out as well. Or did he really? So let's look at how Ray Dalio essentially rug pulled Alibaba investors. So for the record, when I use terms like backholding, rug pulling, those are meant for exaggeration purposes. Do note that the only thing that I can't exaggerate enough is the like button. So remember to smash it like you have never smashed before. Also, this video is sponsored by Weibo. Every single new sign-ups can get up to 100 USD worth of Google shares. I'll leave the link and instructions down below. Essentially, you just need to deposit a minimum sum of 2,000 Singapore dollars and execute a total of 6 trades in the first 30 days. That's an 8% ROI in 1 month. Definitely better than Alibaba. Jokes aside, Weibo also allows for investing into fractional shares. And I don't know why this is not a common feature for other brokerage platforms. So they pride themselves in zero commission trading as well. Don't let this 8% ROI deal get away. Link in the description. Now, getting back to the video. Anyhow, I think Ray Dalio is not an unfamiliar face, especially to Alibaba investors. I think many consider him as one of the top few super investors that gave Alibaba the stamp of approval. Besides, action speaks louder than words. So the portfolio under Dalio's management, Bridgewater Associates, have been adding to their Alibaba position in the last 4 preceding quarters. So from 1.4 million shares in Q2 of 2021 to 3.4 million to 4.2 million, and at the start of this year, Bridgewater had 7.5 million shares. So he essentially 5x his Alibaba position in a 12-month time frame. So tell me more about what you think his thought process was. Oh, and mind you, if you look back at the price action of Alibaba in that specific time frame, from Q2 of 2021 to Q1 of this year, Alibaba's valuation basically fell off a cliff. So by selling out last quarter, they definitely booked a huge loss on this position. So a lot of you will ask, what happened? Was he making right a mistake? Ultimately, nobody knows unless Dalio publishes a statement on LinkedIn or Facebook outlining his thought process. That said, sometimes fund managers might not even be truthful when making such public statements and attempt to hide their true motivation. So that's why retail will always be kept in the dark. So before we open the Pandora box of different conspiracy theory behind why Dalio sold Alibaba, let's try to outline a few facts first. Yes, Bridgewater exited their entire Alibaba position. However, alongside Alibaba, they disposed JD.com, NetEase, Bilibili, and Didi as well. So what do we make out of this? We'll consolidate later. On the flip side, however, Bridgewater did add to their Baidu and Neo position while maintaining their Li and Xpeng position. So interestingly enough, Bridgewater's biggest add in the previous quarter was $31 million worth of Sea Limited. And mind you, Sea Limited is Alibaba's rival in the Southeast Asia market. So I'll let you make your own conclusion on that front. Now, circling back to this Alibaba travesty. So I know many bears are extremely excited because super investors are slowly all exiting the stock one by one. Many would claim that the thesis for Alibaba is definitely broken. But if we were to really single out Bridgewater's allocation and go down the argument that, hey, because the thesis for Alibaba is broken, that's why they sold, does it mean that the thesis for JD.com, NetEase, Bilibili, and Didi are also all broken? Now, maybe he lost faith in the entirety of this basket of Chinese equities. Maybe the geopolitical concern is too much to bear. I think it was a very quote-unquote common argument in the Twitter and Reddit space when investors are essentially trying to speculate Bridgewater's recent decision. But mind you, this filing was for last quarter, from April to June. So the whole fiasco between Taiwan, US, China, and Nancy Pelosi was in the earlier part of August. Hey, you can of course argue that geopolitics might still have been an extremely key concern for them, but it definitely didn't escalate to such a great extent in recent weeks. Besides, Dalio still has Baidu, Neo, Li Auto, etc. So some are definitely guessing that this might be a tactical movement, momentarily pivoting out of all these so-called Chinese names because they were expecting a prolonged weakness in the economy, hence exiting most or if not all of these consumer cyclical names. So funny thing though, they still retain their position in Pinduoduo by the way. So I guess you can also argue that the business model at Pinduoduo is highly focused in the consumer staples market. So I will give this explanation greater weight because it does make a very good argument. Furthermore, if you were to see the concentration in names, what does Baidu, NIO, Li Auto, and Xpeng have in common? Yes, they are all related to the electric vehicle and full self-driving industry, and Baidu is achieving great milestones, at least in the FSD space. So despite a quote-unquote potential weak economy for a prolonged period of time, you can probably make the argument that the Chinese government will probably place a heavy emphasis in the EV space with all your tax credit, subsidies, grants for both consumers and also suppliers. And besides, I believe Ray Dalio and Bridgewater do have a good relationship with the Chinese government. Who knows what is the policy direction, especially in the near future, in the EV space. Now, the interesting phenomenon is when there are signs of a slowing economy, especially in the US and the West, investors are excited because everyone is essentially looking forward to more stimulus. But when China's economy is slowing down, everyone is claiming that, hey, this is the end for them. So I guess you can make that conclusion when looking at both their track records, where China tend to be a lot slower to act. That said, I think this phenomenon is getting extremely interesting. It feels very much like everyone is trying to justify how the markets move. So I don't know what's going on, and I'll just leave it as that. Not knowing, however, does not mean that I don't have an opinion. And as they always say, action speaks louder than words. Now, there's also another potential explanation that Bridgewater might have or might have not converted their shares to the Hong Kong exchange counterpart. Personally, I doubt so. They continue to hold shares like Baidu and NIO in the American exchange, so if I were to extrapolate this observation, it does seem like they couldn't care less about the potential delisting risk. Truth be told, I don't understand why delisting is still even a topic for discussion, even until today. Side note, regardless of whether Ray Dalio converted the BABA shares to 9988 on Hong Kong, based on second quarter of 2022, the share conversion movement, there was a total of 1.6 billion Hong Kong shares that were switched over. That's around 7 to 10% of the total number of issued shares, amounting to around 17 to 20 billion, give or take. So speaking about delisting, just last Friday, it made news headlines again when 5 state-owned Chinese companies decided to voluntarily delist from the New York Exchange. So when this news hit the market, I managed to capture a screenshot for the basket of Chinese equities. And as you can see, it was essentially red across the board. Voluntary delisting of 5 Chinese state-owned companies sent shockwaves to the entire basket of Chinese equities. Nice, I love this market. So at this point, I'm not even surprised anymore. Anyhow, regardless of what was Bridgewater's substantiation, whether is it geopolitics, tactical movement, thesis changing, share conversion, it should have minimal impact to your decision. That said, I'm highly curious. For fellow backholders, what's going on in your mind right now? It's easy to quote Warren Buffett, be greedy when others are fearful. But when the time really comes, who has that courage to really be greedy? So don't misrepresent me, by the way. I'm not saying that buying into Chinese tech names today is going to guarantee you riches. It might be a losing bet for all you know. What I'm trying to emphasize is the simple fact that when fear really sets in, we'll know who is quoting and who is practicing. Time will tell. With that, I'll see you in the next video, but more importantly, I will see you on the moon. Goodbye!